Hello guys, in this video I'm going to show you how to trade boom and crash index using double top and double bottom patterns like a pro. Make sure you like and subscribe, for this will motivate us to continue to make more educational videos like this. So starting with the double top pattern, the price is moving upwards and it's making high highs, high lows and high highs. As it reaches a certain point, which is this point right here, makes a push to the downside. As the price was pushing down to the downside like this, it was breaking the previous higher lows. So what does it mean? It means that the uptrend is now being weakened. The price pushes back to the top and makes an attempt to push to the upwards and breaking these zones right here, but it failed, which leads to the market makers clearing the liquidity that is up right there, and then the price pushed to the downside. So when the price reacts to the same point it reacts before, it created a very powerful and a very strong area of resistance. Then we saw the price pushing. So this is the characteristics of a double top pattern. So coming to a double bottom pattern. So the price is pushing downwards, and as it was pushing downwards, it was making lower lows, lower highs, lower lows and lower highs. And then the price reaches at this point and then makes a push to the upside. When it is making this push to the upside, it shows that the downtrend is being weakened and there is now a potential, and it also means that we are likely now to see the formation of an uptrend movement. So the price pushed to the upside and then makes an attempt again to break this same point, but it failed. So the price ended up creating these two equal points and then forming a very important and a very strong area of support, and then the price started to go upwards. This becomes a very good example of a double bottom pattern. So in the boom and crash market, this can happen in any direction. So here is the best way to use the double top and double bottom patterns when trading boom and crash index. The first one, this is whereby we combine the double top or bottom pattern with the engulfing spike confirmation. And the second one, this is whereby we wait for a double top pattern to form, and then we wait for the price to break the neckline, and then we wait for a small pullback that will come to the neckline, and then we take our entry. The third one, which is the last one, we wait for a double top pattern or a bottom pattern, and then we wait to see a nice trend line break with the price, and then we take our entry. Let's look at the first one, the double top or bottom plus engulfing spike confirmation. So you are in the market and you are trading spikes, and this is boom 500 index. So the price has created a nice touch to this particular point right here, made a push to the upside, and then comes back to the same point, creating two equal points. This means that the price has now created a very strong and a very important area of support. From there, we saw a larger spike spiking upwards, and as this spike upwards, we can see that there was this small candle, which is the red candle, a bearish candle, which was engulfed. So this is what we call an engulfing spike movement. The moment we see the first spike spiking upwards like this and engulfing this small red candle right here, it means that this is now our entry point. So how are we supposed to enter this particular trade? You take your entry at the end of this spike right here, then you place your trade, and then your stop loss, put it just in the middle of that particular spike. So you take your trade like this, and then you target the whole area to go upwards like this. So you are trading spike, and this could be a trade that you could have taken and you could have made a lot of money on this particular trade. Very simple, but very powerful. Let's look at another one. This is a second example of a double top or bottom plus engulfing spike confirmation entry. So what are we looking for? We are trading spike, and the market came down, creating this first touch at this particular zone. The price went upwards and then came back again to the same zone, which means that there is no chances of the market breaking this point, because we ended up seeing the price now forming these bullish candlesticks. And the way this forms, this is just not an ordinary bullish candlestick forming right here. We can see how this green spike right here, which is the second one here, engulfed these two candlesticks right here, the bearish red candlestick right here, and this sort of like a pin bar that is at this point, and the price pushed to the upside like this. So which means this is the entry that we're looking for, because we have already confirmed that the market is bullish and we're looking for this kind of setup. So rule number one, what are we going to be looking for? We are looking for the price creating this nice double bottom pattern. And as it creates this double bottom pattern, you're now waiting for the trigger to enter the market. What are you looking for? You're waiting for the engulfing spike confirmation. So which means you're waiting for the price to spike upwards and to engulf any bearish candlestick. And this is what happened at this point. So at this point right here, this is where you're going to be looking for your entry. And you're going to enter this point, and then you're going to target upwards. And then as for your stop loss, you just want to make sure that you put it any area below the engulfing candlestick spike at this particular point, and then you enter your trade like this, guys. So as you can see, guys, as simple as it is, guys, this is how you can catch these major moves. Let's look at the second entry setup, whereby we are waiting for the market to give us a nice and clear double top or a bottom pattern, and then a neckline break, and then we wait for a pullback, and then we enter the market. Right, so this is Boom 500 index. As we can see, this market was a bullish market because we can see how these structures were being formed. We didn't see the market coming back and breaking these high low points. The price was continuously making high highs. We can see by this point. Again, we can see again by this point. Again, we can see again by this point. So then what happened? We saw the price pushing to this particular point and then went up, created a potential neckline. As it created a potential neckline, it went back again to this level and then creating two equal points. And these equal points now created a very strong and important area of support. And what are we just waiting for? We're waiting for the price to break this point, which is the neckline. As we see the price breaking upwards, and then we wait for the price to pull back to our neckline, and then we take our entry. So this is our neckline. So what are we waiting for? We are waiting for the price to break upwards and then comes and retrace back into this point, and then we can take our entry to go upwards with the price. Here we can see this is what happened. We saw the price breaking upwards with this candlestick right here, which is a spike. Just wait for the price to retrace back into this particular point, exactly into the neckline, and then we can take our buy trade. So this small candle right here made a retracement into this particular point, and this will give us our entry and the entry that we want. And this is one of my favorite entries because most of the time this particular entry will give you no to less drawdown in the market, because you're just taking a very good sniper entry right here, and then you take your buy trade. Let's have a look at the third and last double top or bottom type of entry. So what are we having here? This is the Boom 500 index market, right? So we saw the price coming to this particular point for the first time, and as it was coming to this point, it was making lower lows, lower highs, and lower lows. So take a look at this structure, guys. It's very, very important. So as the price touches this point, we saw the price coming to the upwards and then created a neckline, then pushes to the backside, makes an attempt to break this point, but it failed. As it failed, it shows us something. The price has created two equal points, and this has created a very good and a very strong area of support, and the price push upwards. But before the price push upwards, guys, if I check my trend line 2 here and I draw it like this, you can see that this was a trend line and this trend line was broken. And if I take this again and I draw it like this, you see that we are having a nice descending channel, which is another type of entry pattern that we actually use when trading boom and crash index. So if I remove this, we just leave with this trend line. So what are we waiting for right here? The first thing, guys, what are we looking for? We just want the price to create a nice double top or a bottom pattern. As we can see, this is a very perfect and a very nice double top and bottom pattern. Now we just wait for the price to break this trend line here, and then we can now look for entry. So which is the entry point that we could have taken from this point? We're just waiting for a full spike, right, to just break this trend line here, and the candle will close. So we just enter at this particular point. As you can see, this was a nice spike upwards, and this was our entry right here. So our entry could be somewhere right here, and then our stop loss, we're just going to put it somewhere down right here below this trend line here, and then we target for the highs. So when you see a setup like this, this is a setup that is actually going to give you a nice swing trade. So which means that if you have a small account, you're likely going to actually grow that small account. You have a $34 account in your Deriv. So which means that if you can catch one of these trades, this is actually going to give you a lot of money, and you can actually double your account or triple your account. So this is a kind of setup which is very, very, very rare. But if you can wait patiently for this kind of setup and you catch one or two per week, you'll be good for the whole week. It's important that we continue to hear from you. Tell us in the comment section below, what video topics would you want us to cover in the next video?